Let me turn the volume on. There we go. All right. Good morning, everybody. Good morning, good afternoon, depending on where you're tuning in from. My name is Patrick France, Senior Instructor here at VectorVest, bringing you our weekly mobile coaching session, teaching you how to make money utilizing the VectorVest Stock Advisory app. All right. So if you guys are ready to learn, why is it still showing that screen? Give me one moment here. Can you guys hear me out there? Let me know that you guys can hear me and the video's coming through for you. Not sure why it's still showing that screen. There we go. All right. Wasn't updating for some reason. All right. There we go. Good morning, everybody. Hopefully everybody is doing well. Hopefully you guys are all out there. There we go. Finally starting to see comments coming through. No people are here. Good morning, Caleb. You will definitely be learning something here today. Good morning, Kyle. Thank you for that. Thank you, Robbie. Thank you, Tanner. Thank you, Drew. VV Nation's in the house. Glad to have you all here. Whew, this week has been a busy week, but this has been an awesome week. For anybody who's not familiar, we've been running over on our YouTube channel, the Trading for Charity event, and so far, week one is in the books, and we have absolutely crushed any expectations I had for the event. So thank you all. If you guys are not familiar with it, thank you all for tuning in here today. Thank you all for that. Seeing something coming in. Belinda's coming in with 50 stars. Thank you, Belinda. Good morning. Hopefully you're doing well. Glad to have you here today. Thank you for tuning in here today. The slides on full. What slides, Mark? You guys should be able to see everything there. All right. So with that, we have an awesome event going on over on our YouTube channel every Tuesday and Wednesday. I'm doing some live trading utilizing the VectorVest software, and we're bringing awareness to raise money for kids in need this holiday season who aren't going to have necessarily the best time, and we're trying to make it better. So we've raised over $1,000 so far the first week alone with your guys' help. You guys have made this an incredible kickoff or start to the event. So before we jump into the mobile session here today, I just want to say thank you and let you guys know that if you're not familiar with it, we do have that event going on. So make sure to check that out. All right. So good morning. Welcome, everybody, especially if you're new. What we like to do here is we first start to take a look at what's going on in the market, and then we'll dive into our topic and discussion, which today we're going to talk about a few different tips that you guys can utilize to make money in the market. Or if you're worried about what's going on, with inflation data coming out at 6.2%, the highest in over 30 years. Yesterday, you're worried about the news out of China potentially Evergrande defaulting. World media seems to be talking about it, but U.S. media seems to say that they're not defaulting yet. There's a lot of confusion about that, but there's a lot of just worry in the market right now. So if you're worried about what's going on in the market, today is going to be a session that you will want to make sure you're paying attention to because we're going to be talking about a few different tips to help you keep your portfolio protected in these worrisome times here. So if that's what you're looking for, you're in the right spot. As always, before we jump into it, make sure to smash that like button, subscribe to the channel if you're not already subscribed, share this out with all your friends and family, and let's jump right into it here today. So first and foremost, as we can see, starting off at the very top center, the market timing is mildly bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. As we can see, we are one tick into the green, and if we scroll down to the color guard, we get that green light from the price column telling us that we're higher day over day and week over week. So obviously we're going to see that green light there. Looking at the RT. RT is actually lower on a week over week basis, but higher than it was yesterday. Therefore, we're going to see a yellow light for right now. Unless the markets really take off, it's going to be hard to see that RT climb back above 1.03 from 5 trading days earlier to get that green light there. Then we look at the buy to sell ratio, which is looking at the overall health of the market. So the buy to sell ratio is looking at the number of buy rated stocks in a database and the number of sell rated stocks in a database. So currently VectorVest tracks over 9,000 stocks in the US market, and we give a buy, hold, and sell rating every single day on every single stock. We utilize those buys and sells to get an idea on the overall health. So if there's more buys and sells, that would show that there's more stocks participating in the market. Therefore, that indicates overall market strength. Now, if the buy to sell ratio goes back below 1, that would show stocks are not participating in the market or that there's overall market weakness. Hey there, Chris. Welcome. Hey there, Ez. Appreciate it. I do greatly appreciate the donations yesterday. Glad to have you here today as well. Thank you for tuning in here again. Mark, good morning. Hopefully you're doing well. All right, so the trends of these three indicators, the price, the RT, and the buy to sell ratio, are comprised to come up with the MTI standing for the market timing indicator. Now, the MTI is going to be cast on a scale of 0 to 2, and above 1 would indicate the underlying trend of the market is up, and below 1 would indicate that the underlying trend of the market is down. So at 1.38, we can see that the MTI is above the level of 1, so therefore the underlying trend of the market still remains in the up situation. Then we look at the trend column. Every single day we analyze two parts of the trend here. The first part is referring to the primary wave, which simply shows the short-term or weekly trend of the market. As we can see, it is up since the price of the VectorVest composite is higher than it was 5 trading days earlier. The second part is looking at the underlying trend, just looking back at the MTI. So since the MTI is above 1, the underlying trend of the market is also up. Last column here is the calls column. Now the calls column stands for our confirmed calls. They're our last signal we get to get into the market and our last signal we get to get out. So as you can see, we still remain in that confirmed up situation as of today. Now, Ram's coming in with a question. Good morning, everybody from Montreal. Welcome, Ram. What are your favorite stocks today? On the side, semiconductors and crypto stocks, or on your side, semiconductors and crypto stocks. Markets, we'll take a look at that here in a little bit, see what we can find there. There's a lot of different opportunities out there. There's over 9,000 stocks. It's hard to say, favorite stocks for the day. But if you come hang out, check out our Trading for Charity, you'll see how I decide to pick some of my intraday picks for stocks for the day. So you can find more insight on there. Today, we're not really going to be talking about that specific topic, but come over and hang out on Tuesday and Wednesday at 11:30 a.m. Eastern over on the YouTube channel. And you can see how I pick my daily stocks and how I trade those as well. All right. Looking down at the advanced declines. So every single time we want to look at getting into the market or look at playing the market to the downside, we always want to analyze the advanced declines. The advanced declines shows that the number of stocks moving higher for the day and the number of stocks moving lower for the day. When we look at the advanced declines, we want to see preferably a 2-to-1 bias. So if the market's moving higher, we want to see twice as many stocks advancing than declining. So right now we're sitting at about 56% of stocks moving higher and about 32% of stocks moving lower, not meeting that 2-to-1 ratio. So therefore, we probably want to be patient, wait for the conditions to improve a little bit better. And then we look at the major indices. The Dow is down 0.2%. NASDAQ bouncing back here today, up about 0.8%. S&P up about 0.25%. VectorVest composite up about 0.5%. What's happening with Digital Turbine? Not sure, Roger, but as always, if you guys want to see your own stocks analyzed, make sure to stick around towards the very end. I'll analyze any stock that you have in mind in less than 10 seconds utilizing the stock advisory. Functionality, mobile app, stock in my stocks. Bill, I'm not sure why you can't click on the stock. Wait. Why can't I click on the stock in my stock section to sell the stock? I'm not sure I'm following you there. But when we get into the watch list section, we can take a look at it. So if you're talking about the my stock section, that's on the mobile. So you're talking about, where does that take you? Okay, so it takes you down to the my stock section. And then under my stocks. So most likely that's a watch list that you have created. So you pull up a watch list, you analyze it. VectorVest isn't your broker, so you're not going to be able to sell a stock through your broker unless you're in here and you have it connected to the trade now. Then you could sell it, but when you're just looking at a watch list, you're looking at exactly what that is, a watch list, a basket of stocks that you put together on your own. Daniel's coming in saying, using VectorVest to select a 24 swing trade with 10% hedge and VIX, averaging 1.5% per day. Not bad. It's my Robo Trader stocks. Not sure why you're having any issues with that. If you are, give our support a call. Unfortunately, I can't really troubleshoot a lot while we're live here, but if you give our support a call, they'd be glad to help you out. If you need the support number, as always, at the very bottom, you can go to contact us and you can get all the contact information. They would be able to troubleshoot that issue for you. All right, there we go. So let's go back into the home page and talk about the market. There's a lot of fear going on in the market right now, as I stated at the very beginning. There's a lot of new people tuning in or just jumping in right now, so I'll restate that again here for you. So yesterday we had the the inflation numbers coming out at the highest reading in over 30 years at 6.2%. We saw the market react, and market doesn't seem to enjoy that, giving people a lot of fear on what's to come, and that inflation isn't necessarily transitory, as the Fed continues to say time and time again. So with that, plus you have a lot of confusion going around about the Chinese real estate market with Evergrande. You see one article stating that they're in default. You see another article stating that they're making their payments. There's no real clear picture of what is actually going on, and it brings a lot of worry to a lot of investors out there. So today we're going to talk about a few tips that you can really maximize or use, so that way you can, be protected, sleep better at night, and not have to worry about your portfolio. So first and foremost is going to be looking at contra ETFs. We talk about contra ETFs a lot here, and contra ETFs are a great way to hedge your portfolio. So luckily, VectorVest is your one-stop shop to find those contra ETFs. So that way you can add them to your watch list or add them to your portfolio, however you want to keep an eye on them. And if you go down here under the picks, we have the stock, or actually, let's just jump right into the premium screeners. Contra ETFs, second row from the top. So contra ETFs, here you're going to find a mixture of singles, doubles, and triples on the more commonly known ETFs. At the very top, you have one for the Dow. So if you're not familiar with what these contra ETFs are looking at, if you're looking for a specific one, not familiar with it, all you got to do is tap on it, come down to the stock analysis report right below the analysis there, and you can get the business description, which tells you exactly what the ETF is looking at. Also, if there's any leverage, you can get that information right there as well. So this can help you make that quick decision on what you should be focused on. And now, if you want, though, as always, you can take a look at the names and you can get a pretty good idea of what these ETFs are typically looking at. So, for example, if you look at the name ProShares Short, meaning going against the Dow, Dow being the last word. So, therefore, if the Dow goes up 1%, this will go down 1%. And just the inverse, if the Dow goes up or goes down 1%, this would go up 1%. And then if you get into leverage, that's where, if taking this example and expanding upon it, if the Dow goes down, let's say 1%, a double leverage contra ETF or inverse ETF would go up by 2%, and a triple leverage contra ETF or inverse ETF would go up by 3%. So that's where you can really help find what fits your needs. If you're more aggressive, if you're more of a short-term trader, you may be willing to accept that higher amount of risk. So therefore, you may be looking at the double or the triple leverage contra ETF. Now, if you're more prudent or more conservative and you just want to have something that will help offset some of the loss in your long positions that you don't plan on selling in a pullback or a sell-off, then you may look at a single leverage or non-leverage contra ETF. That would be the best place to go. When would we have enough data to make a decision on buying Rivian? So we should, Stanley, it was in the software yesterday for the IPO release. I looked at it during the Trading for Charity event when it released. You should have enough information to make a decision right now. We'll talk, if you want to see the analyze, stick around, we'll analyze it there in a little bit. What should we do when a stock is marked to sell? For example, pins. What if I need to wait for the stock to go up to limit my losses? What are the chances of the stock going up eventually, or is it better to cut my loss and sell? So, Vidya, that when the stock reaches a sell rating, and that kind of brings us to what we're talking about here. One of the ways you can protect your portfolio is simply cutting your loss and moving on, or selling your long positions if you're really worried about it and waiting for the conditions to improve. With that being said, you should always have a plan in place of when you're going to exit the position, whether it be an X amount of gain or an X amount of loss. there should always be a plan that you have set up. Before you ever get into a stock, you should always know where you're going to be getting out of the stock. With that being said, if you're brand new and you come in and you take a look and you see a stock in your portfolio that has a sell rating, that is a red alarm or an alert letting you know, hey, you either need to sell now or hold at your own risk. And when you see that sell rating, you simply ask yourself, were the reasons you purchased that stock still true today? If the answer is yes, yeah, the reasons I purchased that stock may still be true today, then, maybe you'll be patient, hold on to it, and wait to see how it handles in the future, but at least start to set up a line in the sand of where you're going to cut your loss if it doesn't go your way. If the answer is no, that the reasons you purchased that stock are not still true today, then clearly that tells you what you need to do. You need to cut your loss and be able to free up cash to reinvest into stocks that'll make you money. Simple as that. All right. Traded UPRO 3-time S&P, 13 times only, watching mainly RT, and was up 275% in 13 trades. Wow, Daniel, that is extremely impressive. Trading the UPRO, trading the triple leverage, that's well done. Hats off to you. What sectors are best for wealth preservation? Things that will offset or outperform inflation. Simple as that. Whatever sectors you believe will be able to outperform inflation. So right now you have to find where your money will grow faster than 6.2%. So as long as you're getting a return higher than 6.2% or 6.2%, you're outperforming inflation. Therefore, you're making gains or preserving your cash or keeping it actually making money there. So that's the best answer for that one. All right, so here we've got a bunch of different contra ETFs that you guys can play around with. Take a look at them. Typically, because there's leverage baked into it, the lower or non-leverage ETFs are typically going to be at the top. Your more aggressive plays that can move a lot faster are going to be at the bottom because it's sorted by RT. So therefore, RT is going to decrease or go down a lot faster or lower than on a triple leverage than on a non-leverage contra ETF. Another place to go. We talk about this a lot. This was something that actually came from these Facebook Live or these streams, and that is under the screeners, going into the featured screens, and looking at the ETF pairs, both bullish and bearish. So in an up market, obviously we want to focus on bullish, but in a down market, if you're worried about the market selling off or you're looking for something to hedge your portfolio, here's a few other contra ETFs that are not just focused on the major indices, but on major sectors or major areas of the market. So biotech coming in number one, you have a contra ETF on gold, emerging markets, you have some of the leverage index ETFs, financials are in here, China is in here, Russell, small caps, gold miners, FANG or FNGD, talking about FANG stocks. So if you're somebody who's heavily invested in Facebook, Apple, Netflix, Google, the big tech companies, FNGD could be a nice opportunity to allow some hedge into your portfolio. Rams coming in asking a question. Often stocks are overvalued, but they keep just going up. VV suggests to buy undervalued stocks rising in price. When should we consider buying overvalued stocks with potential? So, Ram, to answer that question, we talk about it week in and week out. Just because a stock is overvalued doesn't mean it's a bad thing. Stocks that are overvalued for a reason, and even if a stock is overvalued, even if a stock is overvalued, it can still make you money. If you bought it where the current value is and you're riding it to where the price is now, you would obviously have a profit. People are willing to buy stocks that they people are willing to pay a premium on bigger names on the expectations of what they're going to get in the future. Look at Amazon, Apple, Netflix, or not Netflix. What is it? Tesla. Tesla is a prime example. Amazon, Tesla are the best two tips. And could you make money in those? Yes. But it's more of a cautionary sign. If you see a stock that's overvalued, it means to be cautious and know that you are getting into an overvalued play. So therefore adjust your trading plan appropriately. Or if you just want to simply avoid that, you can. If you want to follow the mantra of buying safe, undervalued stocks that are rising in price in a rising market, there's over 9,000 stocks that we track. You can still find a lot of different opportunities out there that are still undervalued. We talked about it last week. So just because a stock is overvalued doesn't mean it's a bad thing. You can still make money on an overvalued stock. It just means you're paying a premium on it at that time, and be aware of that. Adjust your trading plan appropriately. And if you want to stick with undervalued stocks, there's nothing wrong with that. You're getting a bargain on those stocks. So therefore, it's a good opportunity. And you can still make, a lot of money and a lot less risk doing that in that fashion. Is there a way to filter? Yes. I don't have in VectorVest 7. You can, because you can build custom searches. In the mobile app, no. All right. So that goes through our first point. Buying contra ETFs as a hedge, or adding a contra ETF as a hedge to your portfolio. This is one of the simplest, most common ways that people hedge their portfolios. The next two I'm going to be talking about are option plays. I'm not going to get into them a lot, but for anybody out there that trades options or familiar with options, or even if you're not necessarily really homed in on options, these tips at least could help you start to explore an option or an opportunity that you may not be familiar with. So I'm going to bring them to everybody's attention. I'm not going to dive into them too much because we don't have any options tools with the Stock Advisory app. But if you're familiar with options, you can still adapt this or take this information and utilize it to make yourself or to help better your portfolio. So one thing you could potentially do is buying a put. Buying a put is basically like an insurance policy on your stock. Now, the issue with buying a put is if, it's an insurance policy. Just because you have an insurance policy, if nothing happens during that period of time that you're insured, then you lose that premium on your insurance policy. But if worst case scenario, you happen to have an accident, let's say, and you need to use that insurance policy, then it pays for itself 10 times over. Same thing with buying a put. It's basically like buying insurance. If the stock drops, that put will go up in value, and therefore, helping offset some of the loss in the underlying stock. Now, another way you could do that, and the thing with buying a put though is, as the price goes down, the put will continue to increase in value. But you have to close it out, or you have to, sell that put eventually to make sure you lock that profit in. The other option you could do instead of buying an insurance policy is selling a call, like a covered call. If you have shares, every 100 shares, you could sell a covered call against it. And obviously, if you're going to be selling a covered call, you'd want to sell typically higher out of the money. That way, if it does go against you, you get the premium, plus they buy your stock back at that higher price, therefore locking your gains in and also taking, getting paid to do that. You're limiting your potential opportunity with selling a call, but you're also locking in your profit if the stock drops a lot. You're getting that to help cushion that there. How do we know exactly to buy, or how do we know when exactly to buy contras and when to sell it? Also, how big of a trade needed to open on a 50K portfolio? So, Jan, I don't have the formulas, but we did a strategy of the week a long time ago. I forget exactly when it was. I'd have to go back and look for it. But there was a formula that we do for one of our retirement portfolios or retirement courses that talks about when or how much of a single, double, or triple leverage ETF you would need to hedge X amount in your portfolio. It was just kind of a rough guide or a good place to start. It's not an exact science, but I don't have that available, unfortunately. I may be able to see if I can find it, or see if I can find a portion of it, or at least a lead on it, and have that info for you on Tuesday at our Trading for Charity if you want. But yeah, there was a video done a few years ago at this point, talking about the retirement accounts and retirement portfolios that has a formula or a good general guide of how much you should be buying to hedge X amount in your portfolio. But knowing when exactly you should be entering those, that's based off the market timing. Looking at the market timing, looking at trends, watching the daily color guard report. If we start noticing bearish divergences, that is something you want to be aware of. Like right now, we saw if we go to the home page, we go down to the color guard, price is rising on a week over week basis. RT is falling on a week over week basis. So we have price going one way, RT going, it's kind of difficult, but RT going the different other way. And that's a divergence. That's, a worrisome sign for right now. Things could change. Things could, definitely improve or worsen. But that is something that you need to be aware of. And knowing that part of the information or that part of the process can definitely be helpful in timing those. If you're trading triple leverage ETFs, most likely you're going to be focused more on a technical setup than just a broad market move, because you really need to be accurate with your entries and exits on those faster movers there. Yeah, agreed, Ram. Totally agreed with that one. All right. So also, as a side note, we talked about it last week. We'll bring it up again. MTI. We have a saying here, keep your eye on the MTI. Whenever the MTI gets to a level of 1.5 to 1.6, that historically has been where the market identifies a point that is starting to look for a top. And then at 0.6 to 0.7, that's where we start to see the market starting to look for a bottom. Well, what readings have we had in the last week? 1.46, 1.51, 1.54, 1.53, and then 1.40. So we've gotten to that overbought territory. Typically, it can stay in that territory for a little bit before we start to see the decline. But knowing we're getting to the upper part of a wave rather than the lower part of the wave can definitely help you, know when to time your entries and exits a little bit more precisely there. All right. So we've talked about buying contra ETFs to hedge your portfolio. That's a great way to go to take advantage of, the fear in the market. If you're worried about a sell-off, buying a contra ETFs to help offset some of the losses in your long positions. So that way, instead of selling a whole bunch of positions and then having to buy them back, you buy one position to hedge and then you sell that one position to close the hedge. It's a lot simpler of a process, more commonly known. That is definitely a great way to do that. Second is simply buying a put as an insurance policy. So if the stock goes down, that put will increase in value, therefore helping offset some of the loss in the stock. Or the third option is selling a covered call. Only issue with selling a covered call is you're limiting your potential amount that you receive. And so therefore, you may have to continue to sell covered calls over and over and over again to help continue to generate income, to help offset some of the losses in the stock. Now, the fourth and final option that you guys have is utilizing, and this is typically the more aggressive approach, more speculative approach. A lot of people aren't necessarily comfortable with this approach, but I'm going to say it anyways, just in case you are, and that is shorting stocks. Shorting stocks has had a lot of negative publicity this year, but if you're not, blatantly manipulating a stock to short it, you're simply riding a wave with the stock, or you're trading it to help offset or help make money in a down market. In my opinion, there's nothing wrong with it. Making money is making money. And so I'm not against shorting a stock, especially on a short-term trade, because that's just a smart move to help make money. Now, the issue with shorting a stock is potentially unlimited upside risk. So meaning a stock can go up forever. And that is one of the big things that scares people. A lot. Also, you have to have margin on your account. So if you don't have margin, you're not going to be able to short stocks. But if you do have margin, you do short stocks. The best advice when you short a stock is treat it like any long position. Set your gain, set your loss, set your line in the sand. And that way you limit your potential risk. If it gaps up, just like if a stock would gap down, you trade it just like a long position, just the inverse. So you have your target. You have your maximum loss already, predetermined before you get into the trade. Therefore, you can trade it just like a long position, but make money as the stock goes down rather than losing money as the stock goes up. And VectorVest can help you find some great ideas with those. So under the screeners, once again, we go to the featured screens, pulling it up. And why we're doing that, Chuck is asking, are green energy stocks a good replacement for fossil fuel? If thinking historically in regards to inflation, I mean, I don't think clean energy stocks are necessarily a good replacement for fossil fuels. I mean, yes, they are. But I don't think it really has to do with inflation that much. Just for the sense that, I think the bigger impact for clean energy stocks is going to be the infrastructure bill that just got passed, and the vast majority, I believe, is like almost 70 to 75% of the infrastructure bill is going towards clean energy. I think that will have a bigger impact than anything in regards to inflation with that play. If I can't handle a sample buy and sell regular stock. Well, Louis, that is all just, giving everybody different opportunities. Everybody is different. Some people prefer trading options. Some people don't trade options. Some people prefer, swing trading. Some people prefer day trading. Some people prefer just buy and hold. I'm giving you guys a few different options. So that way, no matter what your investment style is, you all have an idea of what would work for your own investment sentiment. I'm not saying one is the best or the other is the worst. I'm giving you guys 4 different ideas. So that way, no matter what your investment sentiment is, no matter what your risk profile is, no matter how long you've been trading or if you're brand new to the market, you have some ideas to help protect yourself, especially if you're worried, because you could be a short-term trader, you could be a long-term buy and hold investor, and still be worried about what's going on in the current market. And so, therefore, these are some ideas on how to keep yourself protected. Do I think that the electric vehicle market is starting to look like the snowmobile market in the 1960s? I am not familiar with the 1960s snowmobile market. Unfortunately, Rick, that was a little bit before my time. All right. So under the screeners, we have new sell rated stocks. Now, as we know, when a stock hits a sell, it tends to stay in a sell period or sell rating for quite some time. And if these stocks are just getting to that sell rating, these are going to be the opportunities that you have a lot of potential with here. So what we're looking at for the very first one, TTEC. You can see the stock on a 3-month basis has been steadily declining. Let's go to the 6-month basis. You had a double top here. You had a double top here and here. And then you had a lower high here. Now moving lower, breaking through some support right there as well. Good potential I like with that one. IMMR. So at $6.95, you may have a hard time being able to borrow it. A general piece of advice is anything over $10. Most brokerages should have on hand. So when you short a stock, you have to borrow those shares from your broker. So shorting stocks can be a little different from investor to investor because it's all dependent on what your broker has available in inventory to be able to borrow from. And the general rule of thumb is if it's over $10, most brokerages will have those shares available to be able to borrow from. But if it's below $10, some may, some don't. It really depends on broker to broker. So IMMR will probably pass on it just because it's probably going to be hard for the majority of people to look or to find it in inventory. So GDOT, you can see a nice steady decline that we've been in for a while. So all of these, if the market gets worse or if the market continues to sell off, the stocks that have been performing poorly in the longest bull market we've seen will get beaten up the most during that sell-off or during that downturn. So therefore, looking at new sell-rated stocks is a great place to go. Also, I believe under the premium watch list, do we have one in the premium watch list? We don't have any in the premium watch list. All right, so I'm going to have to make some changes to that one. But coming down here, where was it? We have new sell-rated stocks going back from featured screens to explore screens. Do we have them? Yeah, we have shorts. We have new sell rated stocks and worst stocks above 20. It's not one of the featured, but it is here so you guys can find other potential candidates. But look at these stocks. Look at the VST ratings of these stocks. 0.36, 0.38, 0.38. These stocks have abysmal ratings and abysmal fundamentals. So looking at poor performing stocks or poor fundamental stocks is another great option if you're looking to short stocks. So all of these, you can find a lot of them here. All great opportunities. And no matter what your cup of tea is, if you like to short stocks, I'm sure you're going to be able to find at least a handful of stocks that would be of interest to you. All right, so that's going to do it for today. That's going to be the main gist here. I don't want to get too much into detail. We've covered a lot. We've talked about, buying contra ETFs, buying a put, selling a covered call, or shorting stocks. All four of those are great opportunities to help hedge your portfolio or help protect your portfolio if you're worried about the current market conditions, if you're worried about the inflation and what that could potentially do to the market. All of that will help offset some of that fear. And these are tips that are different strategies that you guys can utilize to keep your portfolios protected. Also, as a side note, if you are worried about inflation, make sure to tune into the Daily Color Guard Report every Friday night, where we go over the market climate. We talk about inflation, earnings, all of that. So if you're worried, you can rest easy, because we will update you on how everything is performing and if we notice any worrisome signs every single Friday night. Felix, let's see. For buy and hold sentiment, which screen do you recommend on the mobile app? For buy and hold, under stock stock pick ideas. Stock pick ideas, you're going to be looking more at the retirement stocks. So therefore, Felix, you're looking at high RS stocks, safe stocks, stocks that have consistent, predictable fundamentals. That's going to be the more buy and hold type of stock that you'd be looking for. Or dividends. Dividends and fundamentals are going to be your more buy and hold style of stock there. All right. So on that, if you guys have stocks you want to see analyzed here, make sure to start putting them down in the chat, down in the comments. Also, if you haven't already smashed that like button, if you haven't already shared this out, make sure to do so right now. I see we've got 65 people here and only 19 people on Facebook, only 19 likes. Let's see if we can get to at least 30, at least half of that. Come on, folks. If you guys are still here, you guys are enjoying yourselves, smash that like button there for me. YouTube, unfortunately, I can't see from this screen, but I bet you there's still some people that haven't hit that like button. So if that's you, do so right now. All that helps me out, helps out with the YouTube algorithms, and helps, continue to grow this awesome community that we built over the last few years. All right, so first and foremost, let's see. Mark is coming in with TAAS. Let's go take a look. Wait. TAAS. Am I missing it? Must be missing that one here. BNGO. We'll go to the next one. BNGO. Pulling it up. So BNGO. Poor long-term. Okay, let's take our time with this one. Try to rush it a little bit. So whenever we analyze a stock, we have these four indicators at the bottom. All four indicators are going to be cast on a scale of 0 to 2. Above 1 is good, below 1 is bad. That's as hard as you need to make it. First one we're looking at is the RV, or relative value. This is looking at the long-term potential over the next 1 to 3 years. So at 0.6, it tells us poor long-term potential over the next 1 to 3 years. The next indicator is the relative safety, or RS. Below 1 tells us that there's more risk associated with this stock compared to the average stock out there. RS highlights the amount of risk involved with the stock. RT, or relative timing, shows the short-term price trend of the stock. At 0.68, it is in a steady decline right now. So overall, this stock is unfavorable because all three indicators are below the level of 1. Therefore, I'm going to have to pass on that one. All right. Let's see. DATS. DATS, poor long-term potential, a lot of risk involved with it. It's in a steady decline. Overall, stock is not favorable here. That's how fast we can analyze any stock, whether you're familiar with it or not. VectorVest makes it super easy to follow. So this one, good long-term potential, less risk associated with it because they've had consistent earnings for quite some time. Unfortunately, right now they have some worry in their most recent earnings performance. Stock dropped on not necessarily the greatest earnings call, and overall, it's still a good stock, just not the right time to be long in it. Let's see, AL, all right. AL, poor long-term potential, a lot of risk associated with it. You have a nice strong uptrend though, so it's a speculative stock with some momentum behind it. So overall, the stock is favorable. Now, the first two indicators can identify whether that stock is aggressive, speculative, prudent, or conservative. We've talked about this for quite some time. We talk about it a lot. When both indicators are below the level of 1, that indicates a speculative play. All right. EQX, good long-term potential, but does have a lot of risk to get to that potential. You have a nice strong uptrend, so overall, stock's definitely favorable here. BNTX, great long-term potential, a little less risk than the average stock out there. Unfortunately, not the right time to be long in it. Overall, it's a good stock, just not the right time on this one. RC, and we see that a lot and we get this question a lot. Even if a stock has good fundamentals, even the best stocks have downtimes or have sell-offs. That's what creates the buying opportunities. You have to have sell-offs in some of these. So, even if a stock is a good stock, if it's not the right time to be holding it, then it's simply not the right time to be holding it. Wait for that better buying opportunity. Wait for the trade to come to you. Don't try to jump onto a stock just because it has good fundamentals if it's steadily moving lower. That's why VectorVest is the only place out there that analyzes a stock on both a fundamental and a technical basis, all in one place here for you. All right, so RC, good long-term potential, but a little bit more risk to get to that potential. You have a nice steady uptrend. Overall, the stock is favorable here. All right, and let's see, APPS. Apps, great long-term potential, less risk associated with it. You are, however, starting to move lower, so be careful on the timing. Good stock, but timing is definitely of concern right now. IMPUY, and why I'm pulling this one up, as always, if you guys are just tuning in for the very first time, we do have a brand new event going on over on our YouTube channel. I am hosting our Trading for Charity event throughout the course of the next month. We're raising money to donate toys. We're going to be raising money to buy toys and donating them to less fortunate kids who are, the two options right now are either Levine's Children's Hospital, which is a local children's hospital here in Charlotte, or Toys for Tots because Glenn Tompkins is is a Marine, and Toys for Tots is something close to him. So there's actually a poll over on our YouTube channel that you guys can go and vote on under the community section. And we'll end that poll next Tuesday when we go live. And you guys get to decide where we donate the toys to. So if you guys aren't familiar with it, make sure to check that out. It's every Tuesday and Wednesday at 11:30 a.m. Eastern. I will be there. I will be live. I will be trading. I'll answer your questions. If you guys want to see other stocks analyzed like this, make sure to come hang out. Tell all your friends, tell all your family, because for every new subscriber we get over the course of the next month, VectorVest will make a donation on their behalf. They don't even have to pay anything. All they have to do is just go subscribe to the channel, and VectorVest will also make that donation on their behalf. So the more people that you guys tell, the more subscribers we get, the more money VectorVest donates towards the Trading for Charity event that we have going on, and it ends on December 10th. So you don't want to miss out on it. It's a great time. Make sure to head over there and spread the word about it as well. All right, so with IMPUY has great long-term potential. Does have a little bit more risk than the average stock out there, though. You're in a steady uptrend on a short-term basis. Overall, it's a good stock. Now, one thing I will say, with a 1.13 rating, typically anything above 1.1 is my threshold. So if it dips below 1.1, that's when I'm going to start to reevaluate the stock and see if the reasons I purchased that now are still, or the reasons I purchased it originally are still valid today. All right, let's see. NXST. NXST, good long-term potential, less risk associated with it. You have a nice steady uptrend, so overall, stock's definitely favorable here. Apps has great long-term potential, less risk associated with it. However, timing has definitely been softening below 1, so therefore not a time to be long in it, but good fundamentals, just not the right time to be holding it. RVP, great long-term potential, a little less risk than the average stock out there. However, this stock has been in a steady decline for quite some time. Overall, good fundamentals, just not the right time to be long in it. UEC. Hey, Tanner. Hope you're doing well. Glad you could be here today. UEC. Let's see. UEC. Poor long-term potential. A little bit more risk than the average stock out there, but look at that momentum. A speculative play with a lot of momentum. So this is definitely a technical trade with the blast off, the momentum we've seen pushing it higher. Be careful with that, but if you are trading it on momentum, you have your indicators. You should know, most likely you already have your plan in place. And as we say, plan your trade, trade your plan. Let's see, SHW. SHW, great long-term potential, less risk associated with it, nice steady uptrend. Overall, stock's definitely favorable here. Let's see, Mara, M-A-R-A. Mara has good long-term potential, but a little bit more risk than the average stock out there. You have a really strong short-term uptrend. Overall, stock is definitely favorable. Main, M-A-I-N. Good long-term potential, a little bit more risk associated with it though. You have a nice steady uptrend, so overall, definitely favorable here. SKLZ. SKLZ, poor long-term potential, a lot of risk associated with it. However, on a short-term basis, you do have some strong momentum to the upside. Unfortunately, not enough to offset the amount of risk involved with this stock, so therefore, the stock is not favorable currently. Also, if you are subscribing to the YouTube channel, for any new subscriber, if you guys haven't noticed, because I don't think we've had anybody subscribe so far. So if you haven't subscribed, subscribe now to the YouTube channel so you can see the new animations we've added into the stream. So just be patient. Hopefully we get at least one person here today, and that way you guys can see the new animations here for you. Let's see. What did I just leave off with? TCNNF. Okay. There we go. TCNNF. Good long-term potential, but a lot of risk associated with it. You are in a slight uptrend below my line in the sand, but still in a slight uptrend. Overall, the stock's a little bit better than average, but not by much. Would you like on F? Would you like your opinion on Ford contrasted with VectorVest? Oh, okay, yeah. Okay, we'll take a look at that. Let me go back here real quick. So let me make sure I get some of these, and then I'll take a look at that one for you, Daniel. No problem. So Macy's, good long-term potential, but a little bit more risk than the average stock out there. You have a really strong short-term uptrend right now, so overall the stock is definitely favorable. DOMA. DOMA, poor long-term potential, a lot of risk associated with it. You're steadily dropping. Overall, stock is not favorable. BB. BlackBerry, poor long-term potential, a lot of risk. You're in a steady decline. Overall, stock is not favorable. All right, let's see. We did TC extra off. Got to do extra off. Where's Jay at today? I don't think I've seen him here today. Jay, you here with us today? Extra off. This is a speculative play. If you go to our YouTube channel, I did a video about this on Monday, I believe it was, talking about the news. Extra's potentially going to be added into the NASDAQ exchange, which will be huge. But this one is a speculative play for the time being. It has poor long-term potential, a lot of risk associated with it. But there's a lot of rumors and a lot of news coming out, so therefore it has good timing right now. Overall, for the first time in quite some time, I can say the stock is slightly favorable here. Finally, let's go. Let's take a look at Ford. So Ford, pulling it up. Ford has good long-term potential, does have a little bit more risk associated with it. You have a really strong short-term uptrend. So overall, the stock is definitely favorable. With Ford, and with any U.S. manufacturer. I think, with the chip shortage, with everything, I've talked to a few different people that are all looking for cars right now. One has placed an order for a car, and it's been now 3 months, if not longer. The car hasn't even started getting built yet. I've talked to another person that took their car in, and they had no cars on the lot. They were going to get it serviced, and when they went there was no cars on the lot. And the truck that they had coming in later that week, all the cars were already paid for. The truck that was coming in next month, all the cars, are about 90% of the cars were already claimed. So, auto manufacturers are making as much as they possibly can, but there's definitely some limitations with that. Also with Ford really seems to be running off of that news of the electric F-150 or the Lightning. And that is definitely a huge move, but we've got to see who's going to have the better battery life. I was talking to a colleague of mine just a little bit ago about the electric vehicle space. The electrical or EV race, or the EV space, is going to be measured on range and power of the battery motor. Whoever wins that race is going to be the dominant player. Right now, Tesla has clearly been that. With their ludicrous mode, and you see videos all the time about how fast those things are, and their 0 to 60 times and their range. They're clearly leading the race. You look at the Mini Cooper, the electric Mini Cooper. I actually had to look this up because I couldn't believe it. But you look at the electric Mini Cooper and it gets 100-mile range. 115 miles. You look at a Tesla, which is a lot bigger, heavier, more room, more spacious, gets about 500 miles for the range. Excuse me. So that is going to be the big race there, is who has the capability to really set themselves apart, and who's going to take the lead, who's going to have the better performance, who's going to have the longest range, fastest recharge times, those types of things. Ford's definitely getting a lot of publicity recently, but how long that publicity will last is anybody's guess. And it's, there's definitely a new car race in town between the manufacturers. So it's going to be interesting. I think we're at the beginning, or the start of a big car race, essentially. I don't want to say arms race because there's not, arms races going on, but car race going on who's going to take that spot, who's going to be the competition that gets, competes with Tesla, or takes over or takes share from Tesla. That's going to be really where it comes down to. Chuck's saying this may sound odd, but following the news, illegal federally, is there a workaround? No idea, Chuck. That is, laws and all that are not my forte, unfortunately. All right, Rick's coming in with a few stocks. We looked at PayPal earlier, Rick. BYND, we can take a look. BYND, poor long-term potential, a lot of risk associated with this stock. Stock is steadily free falling. Right now, it's not favorable. I remember when this thing was $120 a share, everybody was coming in saying, why is this stock, considered speculative? Why does VectorVest have poor RV and RS ratings? Its stock's skyrocketing. Well, look at it, folks. This is why we've been around for 30 plus years, is because the system works. The data is non-biased. It's not personal opinion. It's analyzing everything on a systematic approach, not just an emotional approach. All right. PTON, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, stock is definitely not favorable. All right. And we'll do one last one for the day here. AUPH, poor long-term potential, a lot of risk associated with it. However, this is a momentum play. You have a good momentum move right now, short-term momentum move of 1.46. Overall, making the stock favorable, but only if you're a momentum trader. If you're not a momentum trader, simply be patient, wait for another opportunity to come by. But if you're a technical trader, momentum trader, yeah, there's definitely some money to be made here. All right. So on that, let's take a look at the homepage. We still remain one tick into the green, therefore the market is mildly bullish, and VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. Scrolling down, we still have the one green light in the price column. RT is still flat at 1.0. Buy to sell ratio actually pulling back a little bit, I believe, from where we first looked at it this morning. Looking at advanced declines haven't budged very much at all here today. 57% of stocks moving higher, up just shy of 1% from where we started the session off here today. Decliners at 32%, basically flat. Therefore, still not at that 2-to-1 bias. Looking at the major indices, the Dow is down about 0.1%, Nasdaq's up about 0.9%, S&P's up about 1/3, VectorVest Composite up about 0.5% so far for the session. So once again, thank you all for tuning in here. Thank you all for continuing to support the mobile coaching sessions every Thursday. Once again, if you want to come hang out and support the Trading for Charity event, it's over on our YouTube page. It's every Tuesday and Wednesday at 11:30 a.m. Eastern. So far, we've been going for about 2 hours every stream, but it's up to you guys. If we get more and more people coming in, you guys are enjoying it, by all means, we'll stay longer. But so far, we're doing about 1.5 hours, 2 hours where I'm trading live, answering your guys' questions, taking a look at headlines, impact on that. So yeah, if you guys are interested, make sure to spread the word about that. Head over to our YouTube channel, tell all your friends. Every new subscriber we get over the course of the next month, VectorVest will automatically make a donation on your behalf to go towards the end goal there. So it doesn't cost you anything, shows support to the community that we built here, and also helps support kids less fortunate that are going through a hard time over the holidays and trying to make that holiday season better for them. So thank you all for tuning in here. I hope you have a great rest of your trading day. Be safe out there. Be careful out there. And have a great weekend. And until next time, take care. Adios and toodles.